Good morning. This is Jovine with Behind the Markets. Happy Wednesday. Today is Wednesday, April 9th, and we are making it through the month together, aren't we? Okay, today I want to talk about something I teased in yesterday's video, which is basically what do you do in a market where there's a lot of volatility, down, up, down, up, and you see a lot of scary headlines, don't you? Aren't they very scary? I saw a headline the other day. What makes this market different is that it's not a market event. It's really an event that impacts the real economy. I won't say who said that, but again, we've never seen anything like this. Biggest mistake in 90 years. Oh my God, it's crazy. It's crazy. The world's coming to an end. Oh my God, people are panicking. Look, let me tell you something. What's unique about all down markets is that it always sounds like this. It's always the biggest crisis since blah, blah, blah. The most unique, painful thing since yada, yada. It's always the same narrative. It's that very narrative that drives prices down. It's the story that Wall Street is telling itself, which really means for us as predatory investors, their panic is to our benefit. You remember that cartoon, Chicken Little? Oh, the sky is falling. The sky is falling. Falling is the sky. Look, we don't have to be Chicken Littles, okay? We can say, okay, look, here's what we say to ourselves. Okay, there is a playbook for this. This is not the first time this has ever happened. It's not the first time we've had tariffs. Not the first time markets have gone down. It's not the first time we've had a little stagflation. Let's go through our history book and see what it teaches us. Let's see what lessons history has for times like this. And something that really helps me is I break the world into two columns, things I can control and things I can't control. And the things I can't control column is where the market is, what people are saying. Yeah, and I can't control any of that stuff. Can't control what the Fed's going to do. Can't control what Trump's going to do. Can't control what anybody. China's going to do. Germany's going to do. Can't control any of that stuff. What I can control is how I react to what those people do. And how I react to these external events is I hold on to the things that I have that I believe in, which I don't own things or recommend things that I don't believe in. And then I start to look for opportunities out there. What kinds of companies? And remember, in Midnight America, I've been telling you guys that this was going to happen. Like we're going to see a pop of a bubble. I didn't know it was going to be this. I thought it'd be something else. But here we are. You got to play the ball where it is, not where you thought it would be. Here we are in a situation where the market is down and there's a lot of volatility and people are screaming and, oh my God, you've never seen a mistake like this. It's the biggest. I saw Jeremy Siegel on CNBC the other day saying, quote, Trump's tariffs are, quote, biggest policy mistake in 95 years. Wharton's Jeremy Siegel says, we'll see how it all plays out. Okay. Nobody knows. But when you see headlines like that, that means prices are getting good. Okay. Scary headlines equal cheap stocks. So what would I be doing? What am I doing? Okay. I'm holding on to the things that I like that I've had for a while, especially even small cap. I'm not even looking at that side of my portfolio anymore. I'm like, ouch, especially biotech. But here I am. I'm an adult. I understand that if you pull the camera back 5 years, things look a lot different than they do right in the middle of a big headline like that. Scary headlines. But what I'm doing is there are certain types of companies that do well during times like this. So what I'd be looking for are companies like Meta. Once it cracked the $500 range, I say to myself, why is Meta, Facebook, a good company? Because of a few reasons. Number one, they're not really exporting or importing things, right? It's a software, it's an application, really, that makes money on advertising. They have low capital requirements. Imagine you make cards. Oh, God, what a terrible business to be in right now. Or chips. You got to build plants. Where is that getting the tariff? The plants, every 10 years, you got to retool your plants, move the factory if you're making cars from Mexico to America. Those are very capital intensive projects. They take a lot of time and a lot of resources. What we want to do is we want to focus on companies that have high returns on capital, meaning high profit margins in relation to the amount of money it spends to get that. So take it this way, look at it this way. The average company in America earned 12% on its money, a 12% return on its invested capital, meaning that for every $1,000 it invests in its business, it makes $120 back a year. That's average, okay? There are certain exceptional companies that for every $1,000 they invest in their business, they make $300 back, $400 back. Those are companies like Meta, like Visa, like MasterCard. There are companies like that that are out there that have very low capital requirements. They're even better than companies like Home Depot. Home Depot's got to build stores. More capital required to do that. Lower returns on capital. Microsoft is a good one, even though Microsoft is more likely to get hit by a tariff than anything else. Because if I'm Europe, what I'm doing is I'm trying to really squeeze the Trump administration, and I'm putting serious tariffs on services, software services, Amazon, Microsoft. But again, those are good companies. And we discuss exactly how to do this in Midnight in America. We discuss exactly how to pick these stocks, these types of stocks, how to come up with a shopping list so you too can be a predatory investor and really nail it. Look, guys, I'm not just saying this because I'm trying to earn money. I'm good on money, okay? Believe me when I tell you, I could retire today and not work for the rest of my life and I'll be okay. I am saying this to you so that you don't panic, you keep your cool, and you really turn crises like this one into the greatest opportunity of your life. That's the kind of thing that happens during market downturns. And I know I'm not trying to sound hyperbolic. I don't want to sound like a used car salesman. This is actually what I believe. And I believe this because it's based on my experience. And I want to share that with you. So anyway, I'd be looking at companies like Visa, MasterCard, low capital spending, making money no matter what, across borders, not going to really get tied up in that. They will suffer too in a recession because let's say Facebook has advertisers advertising on Facebook. So you'll see that go down. But because they don't have big capital investments to make, they'll be able to absorb that loss without adding more debt and still maintain healthy profit margins. That's what you want to look for. Companies like that get hit in markets like this. Anyway, that's all I have. Have a wonderful day. I'll speak to you tomorrow.